Alright, hello everyone, hope you're doing alright. Welcome back to this video about fair value gaps. So if you were attending the live stream this past Sunday, we were touching a little bit on how fair value gaps are creating a narrative. Now obviously that is a little bit more advanced, but that live stream is a great video to watch after this one. Mainly the beginning of that live stream is where we talk about fair value gaps that are creating a narrative. Again, I'm live streaming on YouTube right here every Sunday at 8:30 a.m. New York local time. So put your alerts on or either join the Telegram where I announce the live streams. Link to the Telegram is in the description. All right, so without further ado, let's get right into it. So as you can see right here, we have a few steps to go over. First one being FVG. FVG, fair value gap. Second one, BISI/SIBI. BISI, buy side imbalance, sell side inefficiency. SIBI, sell side imbalance, buy side inefficiency. BPR, balanced price range, liquidity void, and volume imbalance. All right, so the first one being a fair value gap. What actually is a fair value gap? It is an imbalance that leaves behind an inefficiency in the market. The market moves efficient, so to deliver fair value gap. If we have an imbalance on the buy side, that means we are having a sell side inefficiency. To deliver fair value, we need to rebalance that buy side imbalance and deliver sell side inefficiency. So what does a fair value gap look like? A fair value gap is fairly simple. Right here, you have one candle right here. You have the wick, so keep that in mind. The top of that wick, so this candle, that top of that wick right here. Then we have one candle that is expanding higher. This is a bullish fair value gap. Then right here, we have another candle that closes. Once this candle closes and it leaves behind only a body of a candle without filling in with wicks, then this creates a fair value gap. So this right here, this box is a fair value gap. A fair value gap is located between two wicks and it's a 3-candle formation always. So once this candle closed, doesn't matter whether it's an up candle, a down candle, once that candle closes, that third candle, it creates a fair value gap. Now, of course, right here, if we take a look at this, for example, this isn't a fair value gap. Yes, we have a body, but there is no space between the first wick and the second wick. There is no body in between it. There's no gap. Now, if we move a little bit further, what do we have here? We have a new fair value gap, right? That is a fair value gap. Then right here, we also have a fair value gap right here. You can see a fair value gap gets rebalanced right here. Doesn't have to come all the way to the top. It can already sting into it and then just go lower. It doesn't have to rebalance it fully. So you can probably see how price is navigating towards these fair value gaps all the time. So right here, fair value gap, right here, fair value gap, right here, fair value gap, right here, right here. Price is constantly navigating towards those fair value gaps. So price is constantly rebalancing. It is rebalancing inefficient price action. And again, right, there is no premise to how big a fair value gap should be. This is also a fair value gap. This is also a fair value gap. The smallest little fair value gap right here is also a fair value gap. Even smaller, this is also a fair value gap. As long as the wicks have a little body between them. So right here, there's a little body and the wicks aren't overlapping. If this wick was a little bit to the downside, right, like this, for example, and there was no space in between, then this wouldn't be a fair value gap. But now this is a fair value gap. All right, now if we move on to the second one, a BISI and a SIBI. A BISI, buy side imbalance. So there's an imbalance on the buy side. What does that mean? This right here is an imbalance on the buy side. An imbalance is the same as a fair value gap. And then a sell side inefficiency. So there is no sell side delivery in that buy side imbalance. Of course, they go hand in hand. When there is a buy side imbalance, there is automatically sell side inefficiency. So sell side needs to be delivered right there. So right here, buy side imbalance, sell side inefficiency. Here, sell side gets fulfilled. So to make it even easier, a BISI is a bullish fair value gap. And you can make it easy, right? BISI starts with a B, so buy, so bullish fair value gap. SIBI starts with an S, so sell, so a bearish fair value gap. BISI, bullish fair value gap. SIBI, bearish fair value gap. SIBI, sell side imbalance, buy side inefficiency. So for example, right here, sell side imbalance, sell side fair value gap, a buy side inefficiency. There is no price action on the buy side. So right here, that buy side inefficiency gets fulfilled. Then the next thing, a BPR, a balanced price range. A BPR is two overlapping fair value gaps. So an overlapping BISI with a SIBI. What does that look like? If we take a look right here, this right here is a balanced price range. And again, all these 5 things, essentially 4, because BISI SIBI is just a fair value gap, these can all be used as point of interest or PD arrays that we can trade off of. And a BPR is only the overlapping part of the 2 fair value gaps. So a bullish fair value gap and a bearish fair value gap. So if we take a look right here, we have another one right here. Only the overlapping part is the part you would select. So for example, right here, it is a little bit overlapping. So that is the only part you would select. Of course, keeping in mind, there's also a fair value gap right here. There's also a BPR right here. These are just a nice confluence. So that is a BPR, an overlapping BISI and a SIBI, or an overlapping SIBI with a BISI. Now, the fourth one is a liquidity void. The difference between a fair value gap and a liquidity void, a fair value gap, there has been one-sided delivery, meaning we have either a buy-side imbalance or a sell-side imbalance. A liquidity void, there was no buy-side nor a sell-side imbalance. So there was no delivery of price action at all. It is a gap in the market. It is a liquidity void. There was no price delivery at all. So for example, this is something you will see during news events, heavy news events. So I'm talking about US dollar, FOMC, CPI, NFP. When these high impact news events sometimes happen, they leave behind a liquidity void on the lower time frame. But if we take a look right here at the stocks open up with a gap most of the time because there's no trading right here. The market is closed. When they open up, they are leaving behind a liquidity void. So right here, this part where there is no price action right here, that is a liquidity void. Price has a very strong tendency, even stronger than a fair value gap, what I would say, to trade back into this liquidity void before continuing. So right here, just another example on the liquidity void. This, for example, right here, this little gap in price action, that is a liquidity void. Same for this little gap. Those are liquidity voids. There was no price delivery on both sides of the market. It just skipped a few price points, a few price ticks. This happens on futures way more than on Forex pairs. Now for the last one, the final one right here, the fifth one, a volume imbalance. A volume imbalance is when there is a space between 2 candles. So for example, a candle should normally close right here and then open, and they should be perfectly at the same price point, right? Well, this doesn't always happen, and especially on futures contracts. So you will see this less often in Forex, more so on futures like ES, which is the futures contracts for the S&P 500. And right here, if we take a look and take a closer look, this right here, that is a volume imbalance. That right there. There is a little bit of space between this close and this open of the candles. So that right there would be a volume imbalance. So if we take a look at the daily price action right here, we have a few volume imbalances, right? You can see this one right there, and we could see this one right there. Those are examples of volume imbalances. There is a little gap right here between the bodies of the candles. So this is a 2 candle formation and not a 3 candle formation. Now again, all these things, these 5 things, basically 4, because BISI and fair value gap is the exact same thing. These 4 things are the best when they are overlapping with another PD rate that we have already touched on. Then they are the strongest, and fair value gaps and liquidity voids and volume imbalances, etc. They will tell you a story. So if you are interested in that, then you can take a look at the live stream, especially in the beginning of the live stream. That's where we touch on it. All right, I want to thank you. Study this and study how they form a narrative. And I will see you at the next video on Friday. All right, thank you.